Ladies and gentlemen, good day and welcome to the Q4 FY22 earnings conference call of Dhani Services Limited. As a reminder, all participant lines will be in the listen-only mode, and anyone who wishes to ask a question may enter star and one on their touchtone telephone. To remove yourself from the question queue, please enter star and two. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nikhil Chari from Dhani Services Limited. Thank you, and over to you, sir.
Thank you, and good evening, everyone. Thank you for joining our 4Q FY22 update call. So over the past year, we've been able to build a substantial customer base for our digital businesses. Including the wallet customers, we've been able to cater to more than 5.2 crore customers since we launched our digital businesses. The total number of paid individual customers we were able to serve last year, including our credit product and e-commerce businesses, was 78 lakhs. And our active paid customer base as of March 31st, 2022, stood at 61 lakhs. Given the evolving regulatory landscape, we are making changes and strengthening our business model for our credit product. We are moving away from a monthly subscription product to a model where we charge a one-time upfront annual membership fee to access our credit facility, which can be used for shopping on Dhani at a maximum limit of 50,000 rupees. We have also retained many of the features that our customers valued, such as payment entry easy installments at 0% interest paid at time and 2% cash back on all orders in terms of Dhani Cash, which can be used for future orders, and free delivery on orders. On the e-commerce side as well, we have expanded our platform from being an inventory-based model focused on select categories to a marketplace model where we cater to virtually all consumer needs by onboarding third-party suppliers. This way, we have significantly expanded our product offering to our customers. Over 10 lakh products in over 100 categories, virtually covering all consumer needs for our customer base. The marketplace model also gives us additional revenue stream and commission from our suppliers, increasing this rate if credit is provided on a supplier's products. This business model increases greater customer engagement and stickiness and greater wallet share for us while allowing us to cater to our customers' needs in a comprehensive manner and in a very capital efficient way. Now coming to the financial update for the full year FY22. We recorded revenues of rupees 1,465 crores for the full FY compared to...
Sorry to interrupt you, sir. The audio is breaking from your line. Please check.
Are you able to hear me clearly?
Yes, sir. Now it is clear. Thank you.
Okay, great. So now coming to the financial update for the full year FY22, we recorded revenues of rupees 1,465 crores for the full year FY22 compared to 1,363 crore rupees in the prior year, or an overall growth of 8% year over year. Profit after tax for the year was negative rupees 860 crores compared to negative 230 crores in the prior year as we ramped up our digital businesses. Our legacy loan book continues to run down and as of end of last quarter stood at rupees 2,199 crores from rupees 4,160 crores in the prior year end. We continue to maintain a healthy balance sheet with cash and liquid investments over 1,550 crores, CRAR of 63.9%, and a net worth of 5,271 crores. Going forward, we have put in place a more robust business model both on our credit and e-commerce businesses and will enable us to grow in a capital efficient manner. So this concludes our opening remarks, and operator, we can open up the line for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The first question is from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Hello. Good evening, sir. Can you hear me?
Yes, we can.
Okay. Right, sir. Thank you so much for taking my question, and a very good evening. So my first question is with regard to this explanation of paid individuals, that is 78 lakhs, and active paid customer base, that is 61 lakhs. Sir, how exactly do we define the active customer base? What is the difference?
So the active customer base are the ones who have made a paid transaction over the past 1 year for our e-commerce businesses, or on the credit side, who have paid at least one subscription fee.
And so the paid individuals that are 78 lakhs, they have also made at least one transaction in the last year, if I'm not wrong.
That is correct.
So active basically means the people who are making it on a daily basis. Is that correct?
So active as in, those on March 31st who are, still continuing to pay. Now, there could be certain customers who would have paid a subscription fees earlier in the year, but are, no longer continuing. So those have been excluded in the base as of March 31st.
Okay. And so another question with regard to this, what is the current retention rate with regard to One Freedom subscribers or the Dhani card subscribers?
So, as we mentioned in our presentation, given the evolving regulatory landscape, so we are phasing out this monthly subscription model, and which is replaced by a model in which we will be charging a one-time annual membership fees for our customers to access our credit facility, and which can be used on a Dhani store for a maximum credit limit of 50,000 rupees. So, given the guidances by the regulator, this subscription model going forward will not be applicable.
Okay, so we will not have the monthly subscription model going forward. Right. And so apart from that, since we are moving on to this digital mode, and we are going to onboard third-party suppliers for to cater to all needs of customers. What about the warehouses and what about the physical facilities that we already have? So we have around 6 warehouses, if I'm not wrong, and we had plans of opening physical stores. So how are we going forward with it?
So at present, we do have 4 warehouses in the 4 metro cities.
Okay.
On the stores, as we have communicated in the earlier calls, so the stores we had already phased out. And we're focusing on the inventory-based model, from these 4 metro cities. And for the e-pharmacy part, that is the part that, we are retaining on an inventory-based model. However, for all other consumer categories, it's the marketplace model that we are developing.
Okay, so just for the metro cities, there'll be an inventory model still in place for the 4 warehouses that we have?
Yeah, for the pharmacy part, correct.
Correct. Okay, sir. And sir, what would be the other expenses bifurcation, if you could give us anything about other expenses?
So other expenses pertaining to what?
Sir, from the profit and loss itself, what are the other expenses that we are spending on?
So hi, this is Pinam here. So if you see the P&L, which we've released factors in all of these items. For last year, the other expenses for the company were at 840 crores. But this, of course, includes customer acquisition costs, etc., which going forward will be significantly lower because we've had a large push which has happened for increase in our customer franchise through the course of last 12 to 18 months.
All right, sir. So, with regard to the bifurcation of other expenses, what is the entire thing we are spending on? So, acquisition involves a lot of things, the advertising thing, the promotional expenses, and others as well, right? So, are these things included in other expenses?
Yeah, that is true.
All right. And so, customer acquisition cost, as mentioned earlier, was 750 per paying subscriber. And if we include non-paying subscribers as well, it would ramp up to about 1200. So, what is it right now?
So, as Pinak mentioned, going forward, what we are focusing more on the 5+ crore members that customers already acquired. So this is the customer base that we're predominantly focusing on. And, if you look at, the more recent data in terms of the orders that we're getting from our customers, we're already getting a new user ratio of approximately 35 to 40%. So, and which is, being tapped from this already existing customer base. So given that, over the past year, we've, gathered such a sizable customer base, our approach is, how can we optimize in terms of conversion from this customer base going forward?
All right. So another thing about supplier margins. So earlier we used to forego our supplier margin for the One Freedom subscribers, right? And now we have a take rate of about 10% from the suppliers. So how does it work right now? So including cashbacks and discounts and offers that we have on the Dhani store app. Apart from that, are we still making 10% on whatever we get from suppliers?
So, One Freedom, was a completely different product. So this marketplace model is something that, we introduced only a couple of months back. And, here, what we are, the objective is to ultimately make up to 10% commission from our suppliers. And in products where we provide credit to our customers, the objective would be to go higher than this 10%.
All right. After giving the discounts to the customers, right?
Yeah, this is the net.
All right. And so just one last thing, I have this confusion about One Freedom. Are we discontinuing the product, or are we going to use One Freedom card for this new model as well?
Yeah, so the product is not discontinued. It is just changed in terms of its avatar, in terms of the entire construct it is operating. But the overall parameters, the way we have been conducting it, it continues to remain the same. For example, the repayment pattern over a 60-day period, etc. So all of that remains the same.
All right, sir. So one last question about the legacy loan book. By when do we expect it to run off, and the interest income hike that we see? So we are still getting a lot of interest income. Is it because of the legacy loan book, or how are we seeing the legacy loan book? Because as far as we see the new model since the last say 1 year, we are relying on subscription fee for income as well. I mean, it is forming a major part of the income as well. So where do we see the interest income coming from, and by when do we expect the legacy loan book to run off?
Yeah. So as you would have seen, the legacy loan book has reduced by just shade under 2,000 crores through the course of last fiscal year. And the residual loan book today, which is standing at about 2,200 crores, we expect the same to run off over the course of next 18 months or so. You're right. Interest income is primarily, catering is being derived from the legacy loan book, and which is what we will continue to earn till the loan book is on balance sheet. Having said that, in terms of the new construct we've just explained on the product for One Freedom, as we move along, and which is true for any typical card kind of a business, we will observe that there is a gradual movement from a fee income to an interest income as the business matures. And with the construct which we have put in place, we expect interest revenues also start coming in from the One Freedom product.
By when, sir? If you could give a guidance of
we implemented this effective of 1st June.
1st June. All right. And so, what is the current impairment on the product, the digital product? The current impairment, it was close to about 10% in the last 2 quarters. What is it right now from the unsecured lending on the app, that is the BNPL service?
Yeah. So the overall credit cost, which is there, at a consolidated level for the quarter, it is, sitting at about 19 crores. On the financial assets. Now, the specific breakup of it is not there, but if you were asking in terms of our NPAs, our net NPAs are in the handle of about a little over 8%.
8%. All right. And the credit cost, that is the provision against just the One Freedom book. That is just the app, the digital book.
Right. And any loan which is moving into any DPD bucket, the provisioning will have to be created accordingly.
Right. So the credit cost, that in that sense, the book is 19 crores and the NPA is 8%. Net NPA is 8%.
Give you an exact number. If you were to look at the specific credit cost which we have, in the NBFC, which is there, it is about 27 crores at a consolidated level for the NBFC.
And 19 is the incremental,
27 is the number you should refer to from a lending book perspective.
Okay. And how much of it is for the digital lending?
That split may not be handy, but I think, majority of our loan book is any which ways, even our legacy business had business which we conducted through the app, right? So it's a combined for both products.
Okay. Thank you so much, sir. The best of luck for future quarters.
Thank you.
Thank you. The next question is from the line of Raj, an individual investor. Please go ahead.
Hey, thanks for the opportunity. I think I have a three-part question. First, where are things with the regulatory oversight and the issues you faced? Are they behind you? Are they closed? That's the first one. If you want to go ahead and address that, please.
Yeah, so we've had an engagement with the regulator on this matter, and I think they've taken their observations and our entire product to etc. We've kind of had a lot of new additions which we've done in our product. I think that matter is pretty much something which we've already tried and explained and concluded. But any further updates, if any, we'll keep the investor community posted. For now, there's nothing further from that matter.
Secondly, if you were to pitch to an investor today, let's say a venture capitalist, what would you pitch Dhani as? I mean, what's your strategy? Are you trying to be? I mean, when I look at you, I see so many facets. It's so hard to go to market with, so many different facets at the same time. So it just seems to be a hodgepodge of things. I don't, not to drop competitors' names, but I mean, you're competing with pretty much 4 or 5 major apps out there. So it's kind of unclear to me what you really want to be when you grow up. Don't tell me a super app answers it. So.
No, it's not a super app, and I would also say that we are going after a pretty the customer base in a pretty targeted and sharp manner. So if you look at our way going forward, on the e-commerce side, it's we're going after a marketplace model where our target segment, that and the customer base that we've been able to gather over the last year or so, it's more of the middle to the lower middle income segment in tier 2, tier 3 towns, and the product portfolio that you'll see on our app are not the usual branded products that you will see on other apps. So it's more like the unbranded and lesser known brands, but at very sharp price points. So that is a target segment, and that is our positioning. And the idea to move in a marketplace manner is to offer a comprehensive range to our customer base. That we've been able to gather a sizable base over the last year, but in a very focused manner, and having the overlay of being able to provide credit, gives that much more impetus that our competitors are not, able to offer. So it's still a combination of the credit plus the e-commerce model, but our target market is more the tier 2, tier 3, and that's where we are seeing our customer base to come from as well, and at very sharp price points for unbranded and lesser known brands.
So just a quick follow-up before my third question to this is, if I look at you, if I step back and say, okay, e-commerce, credit and fintech, let's say, is one. Third is, the whole trading aspect of it. And let's say the fourth is this medical aspect of it. Let's say doctors plus consultation plus, pharmacy. So if I look at 4 pillars, if I want to break it down into that, which has the most traction? That's a quick follow-up.
So as with the first 2 that you mentioned, so this is the the focus going forward. Even the doctor consultation part was predominantly earlier a part of our One Freedom product, so that is less of a focus. So going forward, it's more about how can we cater to our customers in a comprehensive manner in terms of the daily needs in a capital efficient way, and that's the marketplace model that we're going forward with the credit lay over it.
Okay. What is your when you say you address the tier 2 and 3, what is your primary mode of customer acquisition for the ones you're focusing on?
See, here the good part is that, we already have a sizable base that has been engaged with us over the last year and a half of more than 5 crore customers. So that is the immediate base, that we're tapping into. And we're seeing good traction with that, in terms of getting them to convert to order more products on the store. So it's less about new customer acquisition. It's more about having the sizable base that we already have. How do we monetize that more effectively and efficiently? Having said that, we do have promotional campaigns going on in terms of Google Shopping and Facebook and influencer programs as well. But we already have the luxury of a sizable customer base that has already engaged with us, and in terms of getting them to convert to this the model that we're going forward with.
Okay, I'll take the liberty of a fourth question, if you don't mind, really quick. What are your value unlocking plans for shareholders specifically, if you have any, in the next 3 to 6 months?
See, the value unlocking plan will primarily come from the traction that we would see on this marketplace model and the Dhani Plus model as we go forward. So it's while it's early days, but hopefully in the coming quarters we'll have traction on these fronts as well.
Thank you.
Thank you. The next question is from the line of Arpan, an individual investor. Please go ahead.
Yeah, thank you. Can you hear me?
Yes, we can.
Yeah, thank you. Thank you very much. So I will on you 2 questions here. The first is on the healthcare segment, where I can see that almost 2/3 of the company losses are from healthcare segment. So how do you see this is going to turn around, and by when this will start making positive contribution?
See, on the healthcare segment, which relied predominantly on the physical warehouse infrastructure as well as the campaigns that we had in terms of customer acquisition. So that is something that we have already reduced quite a bit. So going forward, you won't see these kind of numbers on that segment.
Understand. But if you see the quarter-on-quarter, the overall revenue is declining very significantly, right? I mean, is it because that now things have become normal and there's no like COVID and other issues? That's why there's a impact on the business, or you see growth some in this segment? Yeah.
See, the primary revenue stream on the health side was anyways the e-pharmacy or the medicine delivery. So that hasn't been impact with let's say the physical markets or the physical clinics opening up. On the doctor consultation part, that was anyways, like I mentioned earlier, was an add-on product to our One Freedom product. So that was not a independent revenue generating stream. But on the pharmacy side, we still have a good traction in terms of customers coming up and procuring medicines from us.
Sure, thanks. And do you see any impact of this RBI regulation on the credit card, or I'm not sure if it's really applicable to you on your One Freedom card?
Yeah, so the RBI regulations essentially, mandate NBFCs who want to offer a card-like product to go and seek RBI approval for their product offering. But if you see our revised product construct, the way we've aligned ourselves, it is more in the nature of, a limit which people can use for purchase on Dhani store itself. So, which is something which is practically, a live product any which ways and doesn't get impacted in any manner.
Understood. Thanks. Maybe last question, I'm not sure if you can answer. Any plan for restructuring or any inorganic growth in future or in near future?
No, nothing at the moment.
Okay. Thank you very much.
Thank you. The next question is from the line of Rishi, an individual investor. Please go ahead.
Hello. Hi. I understand that the past few months have not been the easiest for the company, and I appreciate the fact that you're still conducting a conference call in the midst of settling all the issues. I just have a few questions. I think some of my questions were already answered. One thing that I wanted to ask was about the employee count at the end of March, or even more recently, if you could tell us where you are in terms of employee count.
Yes, we have gone through a rationalization process. So as you would have noticed from the previous quarter's presentation, the employee count was approximately 23,000, which is currently at around 18,000.
Okay. And the expenses, which are about 680 crores per annum, do you foresee that coming down?
Yeah, so we are rationalizing our expenses as well. Large part of course, customer acquisition cost is actually something which we are, going to be significantly lower as we go along. But yes, there is a expense rationalization plan which is currently under play.
Okay. And the new model sounds more. Yeah, please go ahead. Yeah.
Sorry, go ahead.
Yeah. So the new model sounds to me more like an Amazon Prime or sort of like Costco model, which I'm more used to and I understand it better. But also, do you have plans like people who are not a paying member do not get free delivery or lower discounts? And are they also allowed to shop on the app if they're not a paying member?
So Rishi, you're right. It is more akin to an Amazon Prime kind of a product offering. There will be nuances which we will bring in as we see more and more traction. But the primary differentiator for people who are paying the fees and joining in for the program is availability of credit for purchase on the store. That's the primary distinction. Of course, as you pointed out, there will be scenarios which will kind of get built out for people who can get free deliveries, etc. But as we speak right now, we are in a franchise build-up phase and would like to cater to as many customers as possible. For the ones who would want to take credit, they can opt for the subscription or rather the plan offerings which we have, or any which ways without that. If someone wants to come on the store and make purchases through their own funds, they are most welcome to do so.
But of course, the customers who avail the credit facility, they get additional benefits like a 2% cashback on all orders, which they would get, in terms of Dhani Cash, which they can use for future orders, as an incentive, and free delivery on the orders as well.
Understand. Thanks for that. And any news on the corporate card front? Can that be considered as a closed venture?
Yeah, that's not a focus as of now.
Okay. Thank you very much. And so when you say that the new RBI guidelines does not allow a card-like business model, does that mean you cannot do a generic BNPL like the kinds of like Zest Money, for example? They allow people to use their BNPL for free, but they charge the merchants. Is that something that you are able to do? Because given that you have a fantastic payments platform and wallets and everything, it's a shame not to do something which seemingly inferior companies are able to do very well.
Yeah, Rishi, I think the interpretation of RBI regulations is slightly different. It does not allow companies like ourselves to offer this product. It very well does allow. In fact, we've gone through a rigorous, entire flow and walkthrough process with the regulator. So it just entails that you need to take, a formal approval from RBI to offer any of such products. That's the only distinction, but it does not limit us from going and seeding that market. But I think as a combination of the acceptability of the product in the construct in which we are offering today and our intent to actually, channelize people to buy on Dhani store itself rather than go on some third-party store and spend through the offering of our credit product, we would want to channelize all of that, capital towards allowing people to purchase on our own store, and which is the intent with which we've realigned the product.
Okay, understood. And any updates on the ADR plans? We were looking at that for this quarter.
Yeah, so I think as you would have realized, our business model is evolving. As we see, more stability and traction around that, that's something which we will take it on board again. But right now the focus is to kind of get this franchise built out.
Okay. And final question on, given that it's now a sort of like a complete B2C business, the likes of Flipkart and Meesho and others, what is the management doing in terms of like sort of reestablishing the brand? It does seem to have taken a hit in terms of, I know there's a lot of frivolous YouTube videos and stuff like that, but that does seem to hamper the image of the brand a little bit. Is there any plans from the management side to boost up the brand image?
Rishi, if you look at our customer franchise, it's still, it's very solid. It's, like I said, we have 5 crore plus customers that we've been able to engage over the course of the last year. And the traction that we're seeing in terms of getting them converted to a marketplace. So, we are seeing, it's early days, but we are seeing good, healthy traction. So, I'm not sure, what direction your question was from, but we are seeing, pretty healthy.
All right. Thank you very much for that. I'll jump back in the queue. Thank you very much for your time.
Thank you.
Thank you.
The next question is from the line of Craig Elliott from NWI. Please go ahead.
Firstly, thank you for spending this time with us this evening. Very much appreciated. As you know, we've been long-time supporters and shareholders. 2 quick questions. The first is, when we're thinking about the model in terms of profit margin expectations, appreciate that you provided some detail on customer acquisition costs, which we can expect to come down compared to the year that just finished. Now, the other big area on the expenses was employee benefits. Now, was that particularly large due to the workforce rationalization? So we also should expect that in the year to come, that will be a lower number? That's question 1. And then question 2 is, as of 31 March 2022, the 61 lakh individual paid customers, what do you see that as a trend or a goal? Let's say, what would be your goal? Now, though you also mentioned that maybe we should start looking more at revenue per customer and not really the number of individual paid customers. So a few more thoughts on that and on the employee benefit expenses, please. Thank you.
Yeah, Craig, hi. Pinant here. Thank you for your kind words. Yes, you're right to interpret that the employee benefit expense has been higher because of the scale-up which the company has been going through, and it will get rationalized through the course of this fiscal year.
Yes, and coming to your second question, Craig, you're right. It's going forward, the appropriate metrics would be the number of orders and the revenue per customer, and because we're transitioning away from a subscription-based model. So those would be the metrics that we would be focusing on going forward.
Okay, great. Thank you very much. Very much appreciated. All the best.
Thank you.
Thank you. The next question is from the line of Rahul Jain, individual investor. Please go ahead.
Thanks for the opportunity. Just wanted to get a little bit more clarity, though you have explained in detail. What exactly is the company's vision? Where we see ourselves in next 3 years or 5 years? Secondly, do we, like other group companies, are we planning to sell this company also?
Coming to the first part of your question, in terms of the vision, our vision really hasn't changed in terms of addressing the unmet needs of the middle income segment in our country, both from a credit perspective and everyday consumer product perspective. So our vision remains intact, as we had embarked on this journey when we launched our digital businesses. What has morphed or adapted is the business model, moving from a subscription-based model to a direct credit model on our store, as well as moving from an inventory-based model to a marketplace model. But the vision remains the same, so that hasn't changed over the course of the last 2 years.
Yeah. What about second question?
Yeah, so there is nothing specific for us to update you. As we explained, the focus is going to be around building out the marketplace model and building out the credit product availability for customers to be able to purchase on the marketplace. The intent is to have the digital franchise which the company has created to continue to see how we can monetize that as we go along, and all the investments which we've made in this customer franchise through the course of last 12 to 18 months, how we are able to seed to those customers in a much meaningful manner through the offering of these two product categories.
Okay. Last question from my side. From last 4 years, investors have not made any money in your stock. Do you have any responsibility towards them, or you don't count them at all?
No, of course, we have full responsibility in that, and like yourselves, we all are fully invested in the company and making this a success. As you would have noticed in our presentation as well, our founder and CEO himself has increased his stake over the last few months. So definitely we are all aligned with you.
Okay, thank you very much.
Thank you. The next question is from the line of Rishikesh Oja from Robo Capital. Please go ahead. Mr. Rishikesh Oja, your line is in talk mode. Please go ahead with your question. Mr. Oja, please unmute your line from your side if muted.
Hello, am I audible?
Yes, you.
Hi, sir. So my first question is, what is the retention rate in the last 12 months?
Hi, Rishikesh. As we mentioned earlier, since our model is changing from a subscription-based model where we talk about retention rates to a model where it's more about paying a upfront fee and then utilizing credit on our Dhani store itself. So the retention rates, would not be applicable over here. And on the marketplace side, like we said, that it's only a couple of months since this is something that we launched. The relevant metrics, we would share with you as this business model progresses.
Oh, got it. Sir, second question on your credit cost and negative carry. So, if I see last you would say that around $15 per subscriber you used to take a credit cost and negative carry. So, can you just provide a breakup of how much is the credit cost and how much is the negative carry?
So again, Rishikesh, I think this is more applicable in the old product construct, where we used to give per subscription or a per subscriber what our negative carry cost was in terms of rupees. So this will really not be applicable. This metric will really not be applicable in the construct going forward.
Yeah, but just to add to what Nikhil mentioned, Rishikesh, the way we are looking at the business as it is getting evolved is that there is a credit period which is available on the marketplace from the sellers, which is available to us, and we are in turn offering a credit period to our customers. We are looking to see how that negative carry cost can be absolutely minimized by trying to map both the constructs in terms of the offer. So I think the long-term plan which we have is more to look at it as a technology and a marketplace model where we are able to utilize the entire backend and the ecosystem to bring in as many sellers and products possible and get as many customers as possible to come and buy those products if required be on credit as well.
Okay, no problem. Thank you very much, sir.
Thank you. The next question is from the line of Ronak Mantri from Marsh McLennan. Please go ahead.
Hello, am I audible?
Yes, Ronak.
So, see, my question is on governance part. See, as any credible company, institution, your shareholders and your people working for you need to know what is going in your company. In the last 2 months, your stock has went down 80% in value, yet no one from the top management has come to any news channel to speak what exactly is going on in the company. Even you have not given any notification on BSE so that your investor can be aware what is going on in your company. So I don't know how governance will play with Dhani in term. And if it does not, I don't know how will shareholder earn anything out of it.
Yeah. Hi, Ronak. Thank you for your question and the feedback which you're sharing. What we would like to update you on this matter is, for any disclosures which we've been making from time to time at a appropriate moment has been a continuous engagement from the customer, from the company side, including the engagement which we are having on this particular earnings call. So, I think we've also transparently, explained the kind of business model which we're looking to conduct, etc. Other than that, I mean, share price, etc. To be honest, we will not be able to comment. That's an independent separate question. Yes, from a business perspective, we would always like to be engaged with all our investor community and take this feedback which you've shared with us. Having said that, as I explained, we are engaged even with this earnings call, and we'll continue to keep engaged with you all.
No, you are correct on that part. I was just saying, for example, your previous company, say Mr. Gagan Banga, he comes on television every 3 to 6 months to explain what is going in the company. Yeah, even their shares went down. But investors are completely aware what is going in the company. With Dhani, we doesn't know what is going on. So everything is in a dark mode, because unless and until people of top management comes in front of national television and speaks what is going on, then only your investor can know what is going on.
So, Ronak, television is one channel of communication. Your feedback is very well taken and appreciated. As I explained, we continue to engage through our, investor presentations and the calls which we are having at the moment, as we continue to conduct over every quarter. But your feedback is very well received.
Thank you.
Thank you. The next question is from the line of Abhijit Mahajan from AB Financial. Please go ahead.
Hello, can you hear me?
Yeah, Abhijit, we can hear you.
Yeah, great. Thanks for taking this question. So I think I've been joining this calls quite regularly for past, I think, 4 to 5 instances. And the way in which the company has changed the business model, I think it's quite agile and a fail-fast approach. So I appreciate for that. However, I would like to understand all this trial and error and the change, what you're going through. Where do you see the silver lining that we find the right business model and we continue and then grow on that in the long run? Because I think this whole evolution phase is taking, I think it has been like last 12 to 18 months maybe.
Yes. Hi, Abhijit. Thanks for your question. And, you're absolutely right. This is, the evolution of the business model is coming from the learnings. And the idea is that given our vision of, catering to the daily needs of the mass Indian population in a capital efficient manner is something that has evolved, over the last couple of years. And so if you look at the model going forward, both on the e-commerce side as well as on the credit side, it's a capital light manner, as well as offering maximum services to the customer base that we've already been able to gather over the last couple of years. This is something the model has evolved into going forward.
And how do you see the profitability and revenue numbers, say 6 months, 12 months, 18 months down the line? What are the projections by when when this company will get back into cash flow positive mode?
See, frankly, too early to say. Hopefully we'll have answers to that question in a quarter or a couple of quarters. But what we would like to emphasize, the couple of points in terms of the customer base that we've already been able to gather over the last year or so, in terms of the 5 crore plus customers who have engaged with us, as well as the capital light nature of the model going forward.
Okay, one last question. So as this business model evolves, I'm going a bit into the next quarterly call maybe. So do you see any further business models which are being looked at this moment? Maybe it's a data. I'm not sure if you want to share, but then the next quarter, do I expect anything new again popping up and saying now we are moving the track again, or you're planning to continue down this route?
Nothing new at the moment.
Okay, yeah. Thank you for taking my question. And best of luck and best wishes for the future.
Thank you, Abhijit.
Thank you. The next question is from the line of Keshav Heda from HSBC. Please go ahead.
Yeah, hi. Thank you for taking my question. Am I audible?
Yes, you are.
Yeah. Wherein you mentioned in the start of the call, wherein you changed your business model to an annual subscription from your monthly subscription basis. So how is it going to benefit you from the previous one? As in,
it aligns the product to the guidelines that the regulator has.
And more importantly, Keshav, I think it is a model in which we believe that there is a much wider customer franchise which we will be able to cater to by virtue of the fact that there is a overall customer data which has got built out, and we would want to maximize reach in terms of reaching to as many customers as possible, allowing customers to pay a annual fee and avail the credit facilities for purchase on the Dhani store. It actually evolves to be beneficial to us from two perspectives. One is, of course, it aids into higher retention from customer standpoint, and two, we are able to channelize all the credit which we are offering for allowing customers to buy on Dhani store itself. So earlier, customers would go to a third-party store and use the card there and utilize our credit facilities. We are actually promoting customers to come on our own store and do the purchases instead of going out and possibly buying the same product elsewhere.
Oh, okay. Thank you for that. And the other question is about how the unit economics going to get affected over here. Wherein you mentioned about modeling would be about revenue per customer and your revenue per order. So what are we expecting going forward? How much can you share some light on that?
From a unit economics, Keshav, the model over here is to get a commission from the suppliers. And as Pinank had mentioned earlier, there is a credit period that we get from the supplier as well. So in terms of the the money tied up, so that period is going to be minimal for us, and in a capital light manner, given the model is to get commission from the suppliers on every transaction that are done. So that's how would be the way to think about economics going forward.
Okay. And the other question is, so are we looking for any further expansion as we move forward for marketplace? So currently we have, as earlier I think so we mentioned, 4 warehouses to cater into metropolitan cities. But other than that, are we looking forward to expand?
No, there is no plan to expand the inventory model infrastructure. What we're focusing on is onboarding suppliers and products on the marketplace side, where we have approximately already onboarded more than 10 lakh SKUs on the marketplace side. So this is something that we will continue to build out.
Okay. So wherein we another question is that when we change our business model to annual basis, so how much impact on revenue are we looking at, and in terms of customer base, if you can share something on that?
So it's early days, Keshav. It's being implemented from 1st of June, but our expectation will be we will be able to bring in a much wider set of customers to adopt this product offering from us, but possibly in the subsequent earnings call, we'll have much more clarity on this.
Okay. Thank you so much. Have a good evening.
Thank you.
Thank you.
Thank you. The next question is from the line of Vivekanda, individual investor. Please go ahead.
Hi, Nikhil. Good evening.
Good evening.
So, Nikhil, I am pretty not happy with the way stock price have actually gone down. I'm a pretty old investor in the India Bulls. Okay, and and you just mentioned that founder Mr. Sameer he increased his stake. So in India Books, every time the founder increased the stake, the stock price have actually gone down. So this has always happened in last 8 years. So okay. And Nikhil, as I you have gone your e-commerce marketplace. Okay. So India Books also has a social e-commerce, and I have come to know that has been completely shut down. So any specific reason for that? In Yari, I have heard that the social e-commerce has totally shut down. And so on one side you have shut down the e-commerce. In Dhani you are starting a marketplace of e-commerce. So I am not sure that if Dhani would be successful in this or not.
Yeah. Hi, Vivek.
Yeah.
We cannot comment on any other company, as well as.
But Nikhil, it's a India Books, it's the same India Books, your other company, at.
Sorry, like Vivek I said, we cannot comment on any other company as well as on the stock
One
price.
side you are, on the other side you grow as a e-commerce.
What we can comment on is, the entire management is aligned towards, building this franchise, and our incentives are also aligned, along with yours, and that's what we're working towards. We cannot comment on any other.
So recently, Paytm Mall, valuation has gone down by 99%. So already India has a lots of e-commerce. Flipkart is there, Amazon is there. Then how are you going to compete with them? E-commerce is a loss-making business. I am not sure that Dhani will ever be able to come into profits. The way things are happening, every quarter you guys give that we are going to change this, we are going to change this. Every quarter things are changing. Loss is increasing. So I am not actually confident that Dhani is ever going to come into profits again. I am very disappointed. I am a very old investor in India Books, since 2008 and 9. And I am very disappointed, whatever has happened in last 4 years. I paid like 240 rupees for a right issue. In December I paid like 108 rupees. Okay, few crore rupees of mine are invested. Now the stock price is trading at 51 rupees. How will you justify that?
Yeah,
I think.
Yeah, thank you for your support for all these years. To your first part of the question in terms of competition and how we differentiate it. So our target segment is quite sharp in terms of where in the economic segment and the geographic segment that we're focusing on, and consequently we've aligned our supplier base and the product portfolio in line with that in terms of these being the lesser known brands and the unknown brands at very sharp price point. And this is something that while the signs are very early, but we are seeing traction in terms of with this approach. So this is what the approach for us is going to be going forward, and in terms of the differentiation compared to the other marketplaces.
Okay. And then even I have heard that these lenders are taking the company to the NCLT. So is it true? I'm not sure. It could be rumor too, but
No,
I
there is
have
nothing
heard
of
this that. Okay.
No, Vivek, it is an absolute rumor. There is nothing of this sort.
Okay. Thanks, Nikhil. Thanks a lot, I may be a bit harsh as an investor, but I am pretty disappointed with the way my wealth has gone down. If you see in India, this fintech companies, they are getting such high valuation. Healthcare companies, fintech companies, they are getting such high valuation. The IPOs are coming at such high valuation, and Dhani is just trading at a $500 million valuation, and even though it has raised so much of funds, they did QIP at 450 rupees, then again at 192, then right issue at 240 rupees, stock options at 150 rupees, again they trade an ESOP at 68 rupees, and then stock price is continuously coming down. So I think everybody is in loss. The founders, the employees, everybody, investors, all are currently in loss. So you guys should do something to enhance the investors' value, their stock value. That's what I wanted to say.
Sure, Vivek, your feedback is very well received. Thank you so much for your patronage for all these years, and we will continue to try our best to execute in a manner in which it is appreciated by the investor community.
Okay, Nikhil. Thanks. Thanks.
Thank you. The next question is from the line of Prasada Rao Kilaru, retail investor. Please go ahead.
Yeah, hi. Thanks for providing me this opportunity. So in February, I think there were news reports suggest that even though the customers are not booked loans, their phone number is being used for booking the loans. So after that, the share prices have crashed several percentage points. Can you shed some light on that? Did you rectify that? What's going on? We are not aware of that so far.
Yeah, hi Prasad. The news reports which you were talking about is pertaining to certain product processes which has been prevalent across the industry and has been offered in a construct by many other lenders as well. Obviously, the company has taken many steps to tighten these parameters significantly, and ensure that these kind of events do not recur. But yeah, we have had a media slack to some extent due to these events happening, but I think that is behind us, and we are not, we've kind of tightened our system significantly.
Okay, fine. And one more question I do have. In the near future, maybe FY23 or FY24, do you expect the company to come into profitability? For somewhere in FY24?
As we shared, it's an evolving model. Our intent will be to do so, but as Nikhil shared earlier as well, we will, as we see, some more metrics evolving on this particular business, in which hopefully we will be able to update you over the course of next 1 or 2 quarters. We'll have much more clarity on the thing.
Okay. Because the thing, last time, 2 or 3 quarters ago, I heard that you expect to come into the profitability in FY22. I heard that, but anyway, you are saying it's taking long time. Even you are getting clarity in the next 2 or 3 quarters, you said. Thank you. Anyway, thank you for that.
Thank you. The next question is from the line of Rishi, individual investor. Please go ahead.
Yes, hi. Thanks again for the opportunity. I had a question regarding the new model, the Dhani Plus model. So when you say it's 500 rupees per annum, so that's going to be just on the store. Is it fair to assume that Dhani stocks would sort of like be separated from, because it used to be under the One Freedom construct? So would we start to sort of like expect that it will be a standalone offering going forward? And if at all, would you be keen to spin that off again? Because I mean, if you look at it, Dhani stocks is probably far better than most other brokerages out there, which are trading at multiple valuations of Dhani itself. So would you be willing to do that in the future?
So Rishi, Dhani stocks will continue as an independent product. The one product, Dhani Plus, as we are talking about, is more focused around credit availability for customers to purchase on Dhani store. Dhani stocks will continue to operate separately.
Okay. And for Dhani store, is the logistics maintained internally, or is it a third-party logistics provider?
So the deliveries are done by third-party logistics providers, but in terms of visibility to the customer, it's like you have in Amazon or a Meesho. It's a one-stop shop as far as our customers are concerned. But the logistics are done by the third-party logistic providers who directly pick up the inventory from the suppliers and deliver directly to the customers.
Okay. And I see, a lot of advertisements on the recent one-day sale offer and the summer sale offers. Any idea, rough, I know it's too early, but any idea of the rough GMV, or would you be publishing the GMV going forward every quarter?
It's early days. Hopefully going forward we'll be able to give you more of those metrics as we go along.
All right. Thank you very much. And
thank you.
Good luck. Yeah.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Nikhil Chari for closing comments.
Thank you everyone for joining the call. For any follow-up questions, please feel free to reach out to the contact information given at the back of the presentation. Thank you for your time.
Thank you. On behalf of Dhani Services Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.